You've made the decision that you want to stop renting or you want to sell your current home, but it's been a little bit since you've bought a home yourself. Congrats. It's an amazing step to take. I'm super, super excited for you and for the road ahead. It might sound like it's going to be a lot, but that's what I'm here for. That's what this video is for, to kind of set those expectations for you on the front end so there are no surprises whatsoever. This is your ultimate guide to being a buyer in today's market. I'm going to give you a lot of tips, a lot of helpful information from start all the way to finish. You're ready for it? Let's go ahead and get into it. So, as I said, you just recently made the decision that you want to buy your next property, or your first property for some of you. If you're a buyer in today's world, if you're not doing a cash purchase, the very first thing you need to do before you do anything else, before you start looking at homes, before you start looking on Zillow, the first thing you need to do is get with a mortgage officer, a loan officer, locally, who understands the Jacksonville market and who can understand what it is that you can afford. Go to them, get a pre-approval, figure out what your budget is. Sometimes your budget might differ from what a bank or anyone else might want to loan you or be able to loan you because of your assets and your income and your bank statements. That's why it's so important to go to a local lender who is knowledgeable about every step of the process for getting you that loan. You don't want there to be any hiccups during the buying process, or you don't want your loan to be denied right before closing because someone didn't verify your income or verify your bank statements. Now, there is always the question, can I just go to my bank? I know they have a mortgage program, or can I call up Rocket Mortgage or anyone like that? You are more than welcome to. Whoever it is that you want to work with at the end of the day is your decision. I always recommend someone local because they typically have the time to talk on the phone or answer their email 24/7, or about as close to 24/7 as possible. They understand what's going on in the Jacksonville local market, and they can help you in person if needed. If anything were to come up that something over the phone can't be handled, they need to come to the property or they need to meet you at an office to talk about it. It's all about that accessibility, if I can talk today. It's all about that accessibility that a local lender provides that not everyone else can. That's why I always recommend that you should go with someone local. But now, after you have that pre-approval letter from your lender, whoever it may be, next is kind of the fun part. Start looking at homes, figuring out what kind of location you want to live in, and what kind of home you really truly do like in this area. There's a ton of different options for you, to say the least. You've got condos, townhomes, bungalows, 2 stories, historic homes, brand new construction, and everywhere in between. Now, the biggest thing to keep in mind is the most important thing for your next home is going to be location. You could have the home of your dreams, but it's 45 minutes from work, 45 minutes from the school, 45 minutes to an hour from everything it is that you're going to want to be doing, and the location's just not what you're going to want. There are plenty of options for you, but the biggest thing to keep in mind is the location going to work for you. Now, oftentimes, and especially with first-time home buyers, there are an array of options that you can buy, that you can get into for a lower price to be budget friendly for you and still be able to put equity into that home, make it your own. So what I mean by that is you could walk into a home, it's on the lower end of your budget, you're saving maybe $100K looking at something like this. It needs work. It needs something to make it your own, but it's livable. It's something where you can still go in, make it yours, enjoy living there, and not have to worry about over-the-top mortgage payments or getting backwards on your equity in your home. It's something where you can make it yours, you can have that pride of homeownership. As long as it's something you can handle, I always recommend trying to go below the top line of your budget. because you never know what could happen financially for you years later down the road. Try to get in for a lower cost if you can, especially if you're a first-time buyer. Try to get in for a lower cost so that you can enjoy being a homeowner and making it yours. Now, you finally found the home that you want to put an offer on. Before you put that offer in, review any disclosures that the seller has on that home. Things like a seller's property disclosure that tells you anything structurally wrong with the home, the age of the roof, HVAC, appliances, water heater, anything like that tells you the age and if there's been any work done, any repiping, replumbing, any electrical work done, anything like that. That's what that's going to tell you. Any HOA disclosures, if you are within a homeowners association, tells you who checks are payable to, how much those HOA dues are every month or quarter or however often, or year in some cases, however often that payment policy is, and review the HOA documents so that you know if, for instance, if you're able to park a work truck in your driveway or if it has to be in the garage. The small things like that is what you really want to do during your due diligence period as well. However, if they are readily available before you put that offer in, I highly encourage you review all of it as soon as possible so you know on the front end what you're getting into with your offer. Now, you finally found the home that you want to put the offer on. You've reviewed all the disclosures. You know everything about that property that you can on paper. Tell your agent, hey, I want to go ahead and put an offer on this property. What goes into that? There's a lot of moving pieces, especially in the state of Florida, but hopefully this kind of breaks those down for you so that you're not overwhelmed when you get to the offer stage. First and foremost, every offer has a purchase price, a binder deposit, and the down payment amount. Now, it can be expressed as a percentage or the total amount that you're going to put down for the home on that loan. That doesn't really matter too much. That's between you and your lender to know what it is that you are able to do on that front. But the purchase price is one of the negotiation points that we always have. The binder deposit. A lot of people are confused when I talk about the binder deposit. In Florida, you're typically required to put down at least 1% of the purchase price as a good faith payment. It basically says, hey, I want to buy this house. This is how much I will put in an escrow account to be held onto until we close on the property. Once you close on the property, that amount that you put down on the front end will be going toward your closing costs. So essentially, say you're buying a $300,000 home. You put down $3,000 for the binder amount on the front end before you close, before anything happens. You get to the closing table, whatever your closing costs are, subtract $3,000 from that because you brought that binder amount to the closing table. That remaining amount is how much you need to bring in cash to the closing table in order to close. Next, we've got inspections. It's the biggest thing, especially for first-time home buyers, that everyone kind of gets antsy about. This inspection period in Northeast Florida, typically between 7 and 15 days, depending on the type of property. During this time, you can have a home inspector come out, take a look at the property, tell you what it is that they can see, what it is that they have found that's wrong with the property. If you're working with a really good one, they will go, if you have a crawl space, underneath the crawl space, up in the attic, up on the roof, test out every single appliance, look all around and be very meticulous about what it is that they report to you. Because at the end of the day, you don't want to get into a home that needs $60,000 worth of work, but it's in a good location, but you can't pay out the $60,000 worth of work just to get it livable. This home inspection kind of tells you what's going on with that. And how it relates to the contract is you have an inspection period of a set amount of days. During that time, you've got the freedom and the flexibility to get a home inspector in, take a look at the property, like we said, tell you what it is that needs to be repaired, And unless you're doing an as-is contract, you have the freedom to negotiate with the seller and say, hey, look, it needs a new roof, or it needs a new HVAC unit, or it needs a little bit of rewiring, or the electrical panel needs to be replaced. Can you replace it? Or are you willing to repair it? This is what we are requesting in a repair request or treatment agreement. Now, this agreement states the seller will repair, replace, or treat anything that the buyer is requesting. Now, obviously, you have to come to terms on what the seller is willing to do and what the buyer is willing to take. Sometimes the seller doesn't want to do any of those repairs, and that's fine. At times, they will give money in an escrow account for the buyer to use after closing for him to worry about scheduling all of the repairs post-closing. And that's okay, because at the end of the day, if you're willing to negotiate that and if you're able to get those wins as a buyer, it's not on your dollar, it's on the seller's dollar. And at the end of the day, when you really think about it, say a home needs a new roof. That seller is not going to be able to sell it to this many other people like you in a similar situation, and they're going to lose all those potential buyers. So it might be beneficial for them to repair that or to give you the credits for closing after closing to repair that. Just a little bit of negotiation that goes on within that contract period. Now, the next part of the contract is the loan approval period. During your loan approval period, you'll be working directly with your mortgage loan officer to try to figure out if you are qualified to purchase the property and if the property is a good investment for them to give you that loan on. Now, what I mean by that is if you, for the most part, there are some loans out there that differ on this, but if you are taking out a loan, most, all, if not all, loans require you to have homeowners insurance on the property. And they require the home to appraise for a certain amount. What I mean by that is, say we're under contract for a home for $350,000. It needs a new roof, it needs a new HVAC unit, you can't get insurance put on the home. And the home appraised for $325,000. You've got probably three options. One, walk away completely. Start the search back up. Most people don't really want to do that, but sometimes it's the only way possible to go through and to get you into a home that you need. Option two, negotiate with that seller and say, hey, look, I really want the home. It appraised. This was the difference. Let's try to find a middle ground that we're both comfortable with, that I'm comfortable with paying, and that you're comfortable with getting. If, for some reason, you come to terms on a price over the appraised amount, some loans may not allow you to close or that gap. That's why it's really important to understand the market, understand what a fair asking price is for that home so that you make sure you're not in an appraisal fight. Or option number three, you get the sellers to say, hey, look, we understand you need the roof, you need the HVAC, you need the appraisal. We'll figure this out. We'll get it all done. You'll be able to close. That is best case scenario. And especially right now in a seller's market in September 30th, 2022, it's very rare that it'll just be a done deal clean like that. Sometimes there are instances of that though. And when there is, awesome. That is great win for you as a buyer. Now, those two key components of the contract are the two biggest for buyers. The third is going to be closing period and closing date. Now, within that closing period, you have to have your loan approval completed, inspections completed. Anything is final as of a couple of days before you close. Most mortgage companies are able to get a loan closed anywhere from 15 to 45 days. especially right in Jacksonville right now. I'm seeing a lot more people being at the 30 days to 20 days mark for a close if they're going through a mortgage. Now, when you're structuring your offers, it's important to keep realistic timelines for this. This includes on the seller side as well. Now, say you have a property that is going through probate, for example. Probate is basically where one family member passes away and it's either an estate or the next family member in line that is getting the title put into their name. In instances like that, it might take a little bit longer to close. And you have to be wary of those timelines and be understanding that no one would be able to close prior to that being completed. But from your end as a buyer, it's important to keep your timelines realistic for closing so that you know it takes the lender 30 days on average to get a full loan approval. It takes the lender 25 days to get the appraisal out there, which happens prior to loan approval. You've got to set your timelines accordingly. That's why it's really important to have that good working relationship with your loan officer. Now, there is one last thing I sort of touched on during the contract process, but it's still very, very, very important for anyone that is looking to take a mortgage out on a property that they need to get done prior to closing and prior to the end of your loan approval period. You need to get homeowners insurance. Now you can go to State Farm, Progressive, Geico, any of the large insurance holders, or you can go to a local homeowners insurance policy carrier, see what they have to offer you as well. Kind of depends on what you're looking for, kind of depends on what kind of home it is that you have. Sometimes working with local lenders, if you have a historic home that you're buying, might be a little bit easier, or local carriers, not lenders, excuse me, might be a little bit easier for you to get insurance put on a historic home with a local insurance provider. Now, that said, some of the main things that homeowners insurance companies look for are the age of the roof, and if it passes a 4-point inspection, the age of the HVAC system, and if it's going to shut down regularly or at all, pretty much, they want it to pass a 4-point inspection as well. The electrical and the electrical panel, make sure all that wiring is up to date. And again, you're probably going to notice a key here. It passes a 4-point inspection. And plumbing, make sure it's all updated. You don't have cast iron plumbing throughout, or you've got mainly PVC plumbing throughout the home, and it passes the 4-point inspection. Now, a 4-point inspection, and this kind of goes back to the inspection period, 4-point inspection is a type of inspection where your homeowner's inspector will take a look at the roof, HVAC, the plumbing, and the electrical throughout the home. As long as the home passes that 4-point inspection, you're good to go. You can obtain, not most likely, there are some instances where it differs, but most likely you will be able to obtain homeowners insurance on that property. Now, went through a lot, but after all this is done, finally get to closing day. Go to the title company, sign the contracts, put everything into writing, get it all complete, get the keys handed to you, get the movers over, go ahead and start moving in. After a couple of weeks, you have some friends over. You're happy. You're a homeowner. I'm super, super excited to work with you on this. This process sounds like a lot, but I'm here for any questions that you may have, from step 1, step 4, to step closing. I'm more than happy to answer anything you have. Feel free to reach out, shoot me a text, give me a call, any questions you had throughout this whole thing. Hopefully it helped. And if you have anything that is kind of still unsure about, I'm more than happy to help out. Let's go ahead and get started and get you into your next home.